Here you go, Jack. Well, it's time for an update. Folks, the Federal Reserve is pissed. Not only is the Federal Reserve pissed, but they're telling us they're prepared for a massive bailout of the economy. In this video, I'm going to give you a full breakdown of exactly what's going on, where the cracks and the cockroaches are, and what you need to know to be prepared, as well as what to watch. I'll give you everything, just like I do every single day. And in order of today, the fact that I made a bet and my promises are always kept. We have coupon code Pennywise for the Alpha Report, which this is a free sample of what the Alpha Report looks like. This was this morning when I give you my synopsis of the notes that we discuss in our Alpha Reports in the morning in an actual written report, which we talk about live. But if you use coupon code Pennywise, it'll be live for the next about 6 hours or so until midnight. And I wrote this morning, I'd guess Amazon is fully priced today, and I said I'd watch for Netflix bounce up with a price target of $11.20. These are great tools, especially if you're trying to trade options. And what happened today was nothing but remarkable. As usual, we're at 1100 in the morning on Netflix, coming off that quadruple bounce this morning, and perfect 11.20. We're at 11.19.50 in the after hours, went as high as 11.34. And then, of course, if you look at that second call there on Amazon, look at that. What a surprise. Pre-market, we just couldn't make it over. Just like I said, likely fully priced, closing lower under that 13%. So if you want that in the Alpha Report, use coupon code Pennywise at meetkevin.com. You could use it as a tax write-off and, well, check with your CPA, of course, and you pay once, you get lifetime access. So with that said, let's get into the Federal Reserve. The Federal Reserve is preparing for a massive and rapid bailout of this market. This is not surprising, and it's exactly why with my startup, we're trying to hoard as much real estate as possible, because we expect when rates fall, we're going to be in a beautiful and delicious position. Consider what Lori Logan wrote this morning at the Federal Reserve Board of Dallas, which Nick T picked up on as well. The following were Lori Logan's comments. She says, "We stand ready to buy more assets if necessary. Even though right now we think it's difficult to cut again, and we actually prefer to hold rates steady, we are prepared to cut rates rapidly if necessary." Now, Lori Logan gives us an exact outline as to why they would rapidly cut interest rates. And I'm going to give you that exact outline of why they would rapidly cut interest rates. But what you need to remember, I'm falling apart over here. But what you need to know is that what all of the Federal Reserve officials are quietly paying attention to are the disasters of things that are happening, like the following. Take a look at this. Just on Wednesday, there was a consortium of multiple brands under the company named Renovo Home Partners that abruptly ceased operations. Now, what's remarkable about 9 different consolidated private equity rolled up contracting companies like Reborn Cabinets, Remodel USA, Allure Home Improvements, what's remarkable about them all of a sudden shuttering their business and sending emails to their employees that they are regretting to inform us that we are immediately ceasing business operations. What's remarkable about all of this is that this company is backed and funded by a company that's public, known as BlackRock TCP Capital Corp, which literally on their balance sheet shows that they're upside down by over 8.5% on the actual acquisition costs of their assets. They're doing so poorly that they're literally not taking management fees. They're waiving their management fees. Guess what this is, folks? Another example of private credit going poopy doopy. Another cockroach. And nobody knows cockroaches quite better than Georgie. Tricolor, First Brands, BlackRock losing billions on a broadband and telecom deal with not only, well, broadband telecom and Bridge Voice through what they call fraud. Carvana's circular financing, now Renovo Homes going bust, all happening in a span of weeks of each other. It can only be a spooky surprise that's lurking. The Federal Reserve is prepared to rapidly cut rates. That's what Lori Logan tells us, and I'm going to break down what Bostic, Hammock say, as well as the conditions that Lori Logan gives us for a collapse in rates. Now, I want to also mention that I think it's pretty clear why my startup just raised nearly $1.5 million in just the last 31 days. This is probably going to go down as our largest fundraise year to date on a monthly basis, but I don't think people are looking at my real estate startup as, wow, we're about to launch a really amazing artificial intelligence platform. I think what people are looking at is they're looking at our real estate and they're going, wow, they're actually a startup that's backed by real estate. And they're only valued basically by their real estate valuation at this point, based on the valuation they're using from 2024 to fundraise now, which means you get a 5% yield investing in HouseHack, also now known as Reinvest. That's our new doing business as. It's the same company, not a different entity or whatever. You get 5% as a yield paid to you on a monthly basis, but you also get all the upside in the stock. Learn more and read the offering circular, of course, over at househack.com or in reinvest.co. Same company, this video is not a solicitation. But here's the scoop. Lori Logan tells us the following. Right now, the unemployment rate is stable. We know this. We know that the concern in markets right now is a sudden shift in the beverage curve, or the beverage curve, however you want to look at it. I don't actually think it is the Hindenburg omen that you need to be concerned about. I also don't think you need to be concerned about the return of Michael Burry. Michael Burry himself says sometimes we see bubbles. Sometimes there is something to do about it. Sometimes the only winning move is to not play. This is very much a throwback to what Warren Buffett tells us, that the hardest thing for men filled with testosterone to do is nothing. That means sitting out, the bubble. This is what Michael Burry is trying to leverage. He's trying to argue that while we might be in a bubble today, it's really difficult to go in and try to short something as powerful with as large of pricing power as a company as Nvidia, especially since Jensen just finished his massive over $1 billion share sale, loading and lining his pockets with the profits that, in fairness, he rightfully helped build. But a company that takes 56 cents out of every dollar to the bottom line, you got to give them some credit to. It's pretty damn impressive. So while it doesn't feel bubbly like it did in 2000 because we've got some massive earnings, there are definitely a lot of folks arguing, we's in a bubble. Don't kid yourself. This time is not different. But I personally don't think that the Hindenburg omen is any bit of a concern. If anything, it should be a sign to you that the dip should just continue to be bought. After all, if you look at the Hindenburg omen here every single red time, you'll notice a very consistent, outcome. Every single post-red line decline or signal, you ended up with a higher stock market. Almost always 1 year later was the stock market higher following the triggering of the Hindenburg omen. So I would venture to argue that this signal is essentially worthless. I would argue that is much more of a signal, but it's much more of a slow signal, is the level of the 27 weeks unemployed individuals, which of course we're not actually getting this statistic anymore because, the government is shut down. But when the government reopens, you'll probably be walking into your most dangerous catalyst. It's not that the government is reopening and spending our money, but rather it is the return of government data. I hate to say it, but the increase of the 27-week unemployed trend is likely to continue, and I personally believe that we are not in a fall-off-the-cliff economy. Right now, we are, as what the Fed calls us, stable. I believe we're in a slow bleed, not in a soft land, not in a hard land, not in a recovery. We're in a slow bleed economy that eventually will result in recession. Now, hopefully not, and I'm not by any means saying the party is over. In fact, we have 10 stocks that we're buying for the next 10 years in anticipation of this. You get those in the Alpha Report. Remember, you could use coupon code Pennywise. The last bear bull scale, which I should update this because it's a little higher now. We're at about a 5.9 right now, but I'll update this and you can see this always updating over at meetkevin.com/data, totally for free. But anyway, you'll see not only my taco scale here with Donald Trump, but you'll see my bear bull scale. As well as some other useful links, like the Meet Kevin app, where you can get the daily wealth every day and other posts. Now, what I want you to think about is how important what the Federal Reserve just said is. Lori Logan tells us that the labor market is in balance, that the unemployment rate at 4.3% is only up slightly year over year, And therefore, we're not at the moment seeing any cause for concern to cut right now more rapidly or to promise a cut in December. This explains why the odds of a December rate cut only sit at 68.3%. We're not seeing this widening gap between the number of jobs available and the number of people who want work because immigration has plummeted. Basically, JOLTS close to 1-1. This means with Lori Logan estimating the break-even unemployment rate at 30,000 jobs per month gained, Powell closer to 0 jobs gained per month, we're not actually in a place where the Fed feels compelled to rapidly cut rates right now. The concerns, though, are the following. Number one, in a low hiring environment, the market may not be able to absorb the layoffs that occur. Lori Logan is very cognizant of the layoffs that have been announced at companies like Amazon, but they haven't actually shown up yet. So, will the economy be able to absorb these layoffs or not? We'll have to watch very closely because if our weekly ADP employment numbers, which now come out on Tuesday, I'll be covering them every Tuesday, if those numbers start signaling that this economy is not capable of absorbing these unemployment or these new layoff numbers, then we should start preparing for even more rapid rate cuts. Again, my thesis is that by 2032, we'll not only be back at 0 interest rates, but we'll actually have such little inflation that the Federal Reserve will be actively running the money printer again, printing money to try to stimulate anything. And the people who are going to win are the people who are exposed to assets, especially leverageable assets without margin, like real estate. Now, if these issues materialize, Lori Logan tells us that the Federal Reserve, quote, will be able to closely monitor and address the issues promptly. In other words, if there's any evidence of these issues beginning to materialize, Lori Logan suggests that the Federal Reserve would be willing to rapidly cut rates. That is a way of supporting the economy very promptly. Oh, this is quite interesting. Face ID works just fine. It's almost like nothing's changed. Put that on Do Not Disturb. How convenient. Anyway, basically, Lori Logan is telling us, let's fight inflation now. But if the Beveridge curve normalizes and the unemployment rate shows signs that it's about to skyrocket, indicating that we've fallen into recession and we may already be too late, we can cut fast if we need to. Now, all of the private credit disaster that we're already seeing, not just Tricolor, Carvana's circular financing, the slowdown in Vegas, things we talked about this morning. Carvana's circular financing, by the way, you should watch that. Because if Carvana stock falls, if Carvana stock continues to fall, it is going to be a sign of a lack of liquidity for private credit because of what the Garcia family is doing. That means as Carvana goes down, we believe that private credit is going to be even less available, and the cycle of a downturn at Carvana stock will just be beginning. We will probably lose 50 to 80% of the market capitalization of Carvana in the event of a private credit downturn, if not even worse. Anyway, more on that in the video that we did on Carvana this morning. You're welcome to check that out. But basically, private credit will likely shake the boots of the JP Morgans, the Jefferies, and the banks all across the board. After all, it was the International Monetary Fund that just told us 90% of the lending going to these non-bank financial institutions are coming from the biggest banks in America. So while we think the banking sector is protected, let's be real. Even the Federal Reserve realizes we may not be. Now, with that said, understand as well that Federal Reserve member Bostic tells us that right now every meeting is live. And while we don't need to make forecasts, we have to consider that right now we need to focus on inflation. And while we took an insurance cut, Bostic didn't want to go for a cut either. He said eventually he got behind a cut, but that was almost reluctantly. So Bostic was reluctant to cut. Schmid was reluctant to cut and voted negative. Hammack was reluctant to cut, though also voted for the cut. And Logan was reluctant to cut, though also voted for the cut. That means you've got 4 members here that are all telling you there is no consensus within the Fed. They're concerned that core services inflation is too high. They're open-minded about labor market softness, but they're going to look at that weekly data to see if they need to do anything. Other than that, they're going to solve liquidity stress by turning off the money vacuum cleaner, that's ending QT. And for now, they'll focus on inflation until there's a sign they have to do anything in the labor market, which means it's entirely possible that we're just going to continue on this upward trajectory for the NASDAQ, for NVIDIA, for the foreseeable future, which is not to say go all in on the market now. What it is to say that you should be cautious and you should be prepared for a change in the labor market. but until we actually see a meaningful sign of change in the labor market, we might be good for now. And of course, subscribe to the channel to get more updates. Use that coupon code Pennywise, which will expire tonight. Happy Halloween, and good luck out there. If you're considering diversifying away from this crazy market, remember you could always go to househack.com. You could also go to reinvest.co. Remember, it's the same company. And if you have questions, I will personally be helping in email over at
email.ir@househack.com.
And again, remember, I could not be more grateful that this is probably going to go down as one of our largest fundraising months this year. I think we're knocking on the door here of $1.5 million raised. We're going to put this to great use, not only into our artificial intelligence and research and development spending, the Blackwell chips that we have, and additional infrastructure for the artificial intelligence product that we are launching, but also towards backing our company by more sound real estate, more wedge deals, so that way we are insulated without any bank debt should there be any concern in the market. There's a reason I personally have not a dime of debt. No mortgage, no margin debt, no credit card debt, no personal loans, no lines of credit, nothing. This is not the market for debt. So, with that said, I need to get to the children.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.